All right, welcome again. So, in this particular session, we'll be looking at three items under a particular topic. So, we're dealing with analytical procedures and the auditor's response to assessed risks. So, still under audit evidence. So, this is more of an audit evidence gathering. Okay, we're gathering audit evidence, which is very important to any audit and assurance um, assessment or exams. So, three items we'll be looking at here: audit evidence and the use of experts, specialists for the audit engagement. Then we'll look at analytical reviews, types of audit testing, sampling procedures. That will be the second part, okay? And then the third part, we'll be looking at audit working papers and why the use of audit working papers for audit engagement. So let's deal with the first aspect, which is the evidence gathering and then the use of experts, audit evidence and the use of experts. So some key items we'll be highlighting in our audit evidence. So I'm going to share my screen in the next second, then we proceed from there. So audit evidence and the use of experts. All right. So look at the various management assertions. We'll describe them. Those that pertain to the SPL and then statement of financial position. Now, what is meant by professional skepticism? And then we need to also understand the meaning of sufficiency and appropriateness of audit evidence. One deals with quantity, one deals with quality. Now, audit evidence is often persuasive, not absolute. That's why we use the word reasonableness. We can't gather everything. We can't gather all evidence to support our work. So when we get a persuasive one to support our opinion, we move on. There are various sources of audit evidence. Each one does a particular good work. We'll look at those ones. And then there are some advantages and disadvantages of using an expert. And under which conditions should we use one? And then we also understand that responsibility of the auditor towards evidence gathering and opinions provided by specialists. Okay, so let's move on. ISA 500 deals with audit evidence. Two keywords come up: sufficient and appropriate. Now, this will give us a reasonable assurance. That's why we call this a reasonable assurance. And then we have a limited assurance, okay? So external audit is more of reasonable assurance, positive assurance. A reasonable assurance that the audit risk is reduced to an acceptably low level. We can't eliminate the audit risk, but we reduce it to an acceptably low level. Sufficiency means the quantity of audit evidence we've gathered. Is it enough? Appropriateness is the quality. Is it of the high grade and level that we need to support our work, right? So the quantity of audit evidence is needed. Audit evidence needed is affected by two: the risk of misstatement. Now, the greater the risk, the more evidence we need. The risk is high, get more evidence. And it's also affected by the quality of that evidence. The higher the quality, the less evidence we need, right? But if the quality is low, we need more. So the sufficiency and appropriateness of audit evidence are related. They are interrelated. Merely obtaining more audit evidence may not compensate for its poor quality. We need the quality, we need the quantity of the right blend. Okay. Now, sufficiency, quantity. This will vary according to the degree of audit risk. So we're considering like the nature of the industry, financial futures leaders, high tech. Those guys are quite complicated. So you will need enough to support your basis. Past experience of the client. If past experience shows that they've been very cooperative, evidence supplied are quite reliable, then you wouldn't need much. Okay, you wouldn't need much sufficient evidence to support your work. Possibility of management bias. If they are really biased in preparation of the account, then you need sufficient evidence to support your work. Now, what are we getting the information from? Is it quite reliable? Is it independently sourced? Then if it is, then we don't need sufficient. We don't need much. The nature, the materiality, sensitivity of the account balances. The higher the sensitivity of that account balance, the more evidence we need. We don't want to take risks. Okay, we want to reduce the risk to a barest minimum. The financial position of the business and potential for fraud. If there is the potential for fraud, we need sufficient evidence to ensure that we are doing a good job. If the internal control systems and the internal and the control environment are robust, very strong, very, very effective, we don't need sufficient evidence. That's why sometimes you realize that when the audit controls, which we have tested, are working well, efficient, we do less substantive evidence, audit where we gather less sufficient evidence. Okay. Appropriateness of audit evidence. So relevance, reliability is quite important to help us as auditors to draw opinion. So how relevant it is to the time that in which we are auditing, to the accounts which we are auditing. How reliable is it to the work we are doing? Now, conclusions that are about appropriateness will be based on the source of evidence, the purpose for which it is sourced, and the control or the assertion being evidenced. So we need these to support it. Let's look at reliability of audit evidence. Auditor-generated evidence is the most reliable. When I generate my evidence without relying on the client, that's sufficient. Written evidence is more important than oral evidence. If it's not documented, we always say it's not done. External evidence is more reliable than internally generated evidence. So getting it from an independent, knowledgeable party is quite important. If the evidence is consistent over time, we can rely on it. Now, we also require evidence from more than one sources. That is when you hear the word corroborative evidence. So source A says 1 plus 1 is 2. Source B also says 1 plus 1 is 2. Source C also says 1 plus 1 is 2. They all speaking the same language. Corroborative evidence. Original documents, we need those ones. We can't rely on copied, scanned copies or photocopied. Don't trust those photocopied ones. They can always be massaged. All right. Then we have what we call professional skepticism. Look at this story. Eric was the manager of a property development company who defrauded the business of which he was the majority shareholder. One question about his activities and the risk of being detected by the audit. He said, accountants can only work on the figures they have got. They can audit the same figures they've got. Auditors will come and see me and I just lie to them and gave them some false pieces of paper, and that was that. They just took it as it is. They don't check much. That checking process was abysmal. I was not worried because I have 20 years experience of auditors. They come, I give it to them, they go, they don't question anything. They lack attention to detail. They lack the knowledge in auditing and accounting. They don't interrogate. They have no interrogation skills. And that was good for me. So as an auditor, whatever they give to you, don't just accept it. Question the information they've given you. So when we talk of professional skepticism, we're talking of a questioning mind, professionally. Questioning whatever they've given you. When they give you any evidence, don't accept it at face value. Question it. Is it reliable? Is it suitable? Okay? Don't accept any explanation they give to you as it is. Okay? Find corroborative evidence to support what they are telling you. So, for example, questioning contradictory information and the reliability of documents. Considering responses to inquiries and other information obtained from management and those charged with governance. And then being alert to conditions that may indicate possible misstatement due to fraud or error. And considering whether audit evidence obtained supports the auditor's identification and assessment of the risk of material misstatements in light of the entity's nature and circumstances. So question everything. So we are not bloodhounds. We are watchdogs. We are not going there to fish out for information or to fish out for issues. But when we are there, we watch out. Anything that triggers, anything that raises a red flag, we flag it. We follow up, we question. Okay. Management assertions, we need this. Okay. So assertions can be split into 3 categories. Assertions about classes of transactions or events for the period under review. Normally. the income statement or the statement of profit or loss. Occurrence. Did it occur? Have we recorded it to the company being audited and not to another company? Completeness. Have we included everything? Have we recorded everything or we left something out? Accuracy. Is it appropriate, the amount we are putting there? Is it correct? Cut off. Are we recording them in the correct accounting period or in the wrong accounting period? Classification. Are we classifying them under the proper account headings? And then we have the second one, which is assertions about account balances, usually in the balance sheet. Okay. Existence. Do they exist? Can we see them? Do they exist? Asset, liabilities, equity, rights and obligations. Do we hold control over them? Are they ours? Are we obliged to pay something? Okay. Completeness once again comes in here. Have we recorded everything? Or we've left something out? Valuation and allocation, we're talking of asset, liabilities, equity, interest. Are they included at the appropriate amount? Have we valued them using the correct allocation adjustment methods? All right. Now we got a third one about disclosures and presentation. Again, occurrence. Did it occur within the accounting period? Rights and obligations. Do we hold rights over it? Do we have an obligation to pay? So disclose these events, the transactions and the matters that pertain to the organization, and make sure they occurred within that particular period or within that particular organization and not outside of the organization. Completeness, once again, have we included everything? Classification, have we classified them under the appropriate account headings? Have we presented and described them as explicitly as possible? And have we presented it in the sense that people can understand what we are presenting? Accuracy and valuation, make sure they are correct amounts, properly disclosed, fairly valued, and that we can vouch this at an arm's length transaction. Okay. Confirming assertions in account. As an auditor, gather evidence to validate assertions pertaining to operation of the account. Now, you must also evaluate relative importance and assess the quality and quantity, sufficient and appropriate. Okay. Appropriate is the quality, sufficient is the quantity to support your work. Once again, your evidence is not absolute, it's not conclusive, it's just persuasive. And we need evidence in terms of sufficiency, same thing coming there as quantity, and then quality, appropriateness, so that we can be sure that the information we are gathering, the evidence we are using to draw our opinion, is reliable and is relevant. So auditor evidence must be relevant to the assertions being tested. Not all tests are appropriate to all assertions, okay? Now, limitation of time and cost may prevent auditor from obtaining evidence from all possible sources. So as much as you can, gather sufficient and appropriate evidence. Corroborate them from sources which you can easily rely on and move on. But if you can't, use judgment. Use judgment. Since an absolute proof is not usually possible, use judgment. We test the controls. So the internal control systems governing the accounting systems, test them. These are not detailed tests of the individual transactions or balances. Rather, we're looking at control procedures. Are they operating satisfactorily? Can we rely upon them? We used to call them compliance testing. So control testing is quite important. And you would have looked at a good number of them in the seminar questions. Test of controls, we're looking for evidence such as authorization procedures. So you would have heard of the control activity SOAP spam. SOAP, S-O-A-P, spam. Okay, so authorization procedures, maintenance of control accounts, reconciliations, checking arithmetic accuracy, comparison of stock or cash count with accounting records, restricted access to assets and records. Okay, now for the auditor, you will not be able to rely on the controls if we find that the controls are not working appropriately. Now, if the controls are working well, then we can rely on them. So it is always important for us to know that controls are working. It is the accounting The controls over the accounting systems that generate the numbers we are testing. Okay. Now, unless the auditors can satisfy themselves that the exception is an isolation departure, then you can overlook that particular weakness in that control. But where exceptions are unacceptably high, control risk would need to be reassessed. That is, the internal control system cannot be relied upon to the extent originally envisaged. So what we need here is that make sure the control over which the accounting numbers are generated is working well. So we can have controls over payroll, over sales, over purchases, over receivables, over payables, okay, over PPE. And they all have objectives, control objectives, okay? We look at those ones. Substantive tests are the detailed tests of the individual transactions and balances. So it includes analytical review, okay? Now the purpose here is to provide evidence to support the relevant assertions we just looked at, particularly the balance sheet. Now, if internal controls are strong, we will do less substantive testing. Sometimes we don't even do substantive testing at all. We don't do them at all. There's something we call directional testing, and this one deals with tracing the transaction from its inception through to the financial statement to ensure that nothing has been missed out. On the other hand, you can also trace from the financial statements back to the inception where the transaction started. Two ways, okay? So check transactions back to original documents. So example, we could trace sales transactions from the customer order through to the delivery note, to the sales invoice issued, to the sales day book, to the sales ledger, and how it resulted in a revenue. You could also go back by picking the sales item from the sales ledger, trace it to the sales day book, trace it to the sales invoice, trace it to the delivery note, trace it to the customer order. Directional testing. This is what I mean. So it could go from source documents to financial statement, or it could go from financial statement to source documents. All right. And you could see the assertions being highlighted here. You could see existence and occurrence. That is when we're moving from financial statements to source document. And then we're looking at also we're looking at completeness from source document to financial statement. We also have what we call rotational testing. So in terms of rotation, it is two things. Rotation of audit emphasis, so performing in-depth testing of different aspects of the business from year to year. So for example, payroll 1 year, sales the next, purchases the next. Then we have visit rotation, where the auditor visits some branches or business location 1 year. The next year he visits a different location or different branch in the next year. We can rely on specialists. Now we need to frequently seek their advice, especially in valuation of inventory, where these inventories are of a specialist nature. Or sometimes we will need specialists to help us understand some technical issues or legal issues, right? For example, if you are an auditor, you want to assess, or you want to review the amount of carbon monoxide emitted into the skies in terms of sustainability reporting. You don't have that technical know-how, so you will require an expert to be able to tell you the amount of carbon monoxide emitted into the skies. Now, before accepting such advice, you should consider reliability of the source, and you need to evaluate the quality of the specialist evidence. Now, in particular, before you accept the advice, consider their qualifications, their experience, and whether they are independent from the client to avoid any biasness. All right. Reliance on other specialists. We should obtain written confirmation that the expert is independent from the client. Don't just listen to oral evidence, written evidence for indemnity purposes. Okay. Now they must also comply that they must indicate that they will comply with the financial reporting ethical code or similar codes. Okay. Now with the key points, the auditor must understand what the expert is advising, and then make a judgment whether what he's saying is accurate or reliable. Now, we are free to reject their opinion if we think their opinion is flawed. Now, the responsibility is always on who? The auditor. You can't say, well, the expert said this and I relied upon that, and so I think he made a good. No, the onus lies on you as the auditor. So you must make the final call. We'll be moving into audit working papers in the next session, but let's briefly touch on it, then we move on. ISA 230 documentation states that auditors should prepare sufficient and obtain appropriate and sufficient audit evidence to serve two key objectives that will give us the basis upon which we issue or express our audit opinion. And it will also demonstrate that the audit was performed in line with applicable regulatory, legal, and financial reporting standards. Okay, so that's why we need to document our work. Now, in documentation, we normally will have what we call the audit program, and it details what we should and what we shouldn't do. Normally, what we should do in each specific audit area. Now, the relevant part must be initiated by the person carrying out the test to confirm that I have done all of these procedures. I've carried out all of these procedures. Now, the program itself is reviewed by the audit manager and the audit partner. We want to see whether really this audit program we've written for company A actually meets the audit objectives for this particular audit area and deals satisfactorily with difficult areas. Right. So they are always reviewed. Working papers must be documented. Everything you do must be documented in the working paper. Now, state the audit objective, the purpose of the test, the kind of test you carried out, the conclusion you drew, the evidence you used to draw those conclusions, any points you think you want to bring to the attention of the management, any adjustments, okay? And we must file this on the current file. Working papers must be filed. In fact, working papers will have the name of the client, the year end of the client, the initials of the one preparing the working paper or working on that particular section, the date the work was done, the initials of the person who reviewed your work, the date it was reviewed, a whole lot of stuff goes into the working papers. The objective of the test, like we said, the conclusions drawn, so on and so forth. So we'll look at the working papers once again, but if you take these sample questions, you would love them. You'll see they give us some in-depth test and testing our understanding of evidence gathering, okay, and the use of experts. You realize that we briefly touch on the advantages of relying on them and the weaknesses of relying on experts. If you take the Malaysian Pentela text or ACCA text, you get some very good additional information on that, okay? All right, so we bring this first bit to a close, and then we'll proceed to the next item on the audit evidence gathering. All right, see you soon. Bye for now.